Hello friends, welcome again to this amazing and wonderful topic, professional and ethical duty of a chartered accountant. Hope you have enjoyed till now. Next point is acting with sufficient expertise, acting with sufficient enterprise. Right now we are discussing chartered accountant in practice. Under that, first we have discussed conflict of interest, then we discussed preparation and presentation of information, and the third point, from the heading you can understand acting with sufficient expertise. You are a chartered accountant. People have certain expectations from you. They expect that you have got expertise in certain fields. Therefore, a chartered accountant must not mislead their employing organization about their expertise or experience. So, whatever are your experience, whatever are your expertise, you must make it very clear to your employing organization. That is the employer. Those who have employed you, make it very clear that these are the expertise I possess, these are the experience I have. Do not give wrong or misleading information. Otherwise, again, it will amount to violation of code of ethics. You cannot give excuse like lack of time. Lack of time is a common excuse. Even the student give this excuse for not doing homework, for not revising. Like for example, I said yesterday, make summary. Now if I ask you, have you prepared summary? Then you will say, no sir, we did not have time. One student has said that he has mailed in the afternoon. Okay, I will check. Incomplete information, insufficient experience or inadequate resources can create a self-interest threat to professional competence and due care. So if you don't have time to do the proper analysis, if you don't have complete information, if you don't have experience, if you don't have resources, then you will not be able to discharge your duty with professional competence and due care. So what are the safeguards to address this threat? So this is a threat to PCDC. Threat to PCDC, that is, you will not be able to perform your duty with professional competence and due care. So safeguards to address this threat would include seeking assistance or training from knowledgeable individual. If you do not have expertise, do not have hesitation in seeking assistance or training from those who are aware. You can approach your seniors, your managers, or other training institute where you can learn those skills. Then secondly, you must have enough sufficient time for your duties. If you give enough time for your duties, you will be able to exercise professional competence and due care. You will not complete the work in a hurry. You will take all necessary care to complete your task. And if the threat cannot be resolved, suppose you are not competent, you do not have expertise, you do not have experience, or you do not have time, or you do not have resource, then don't accept the assignment. Don't take that job. You should consider declining the duties and communicate the reasons. So you can tell your employer the reason for declining the duty or that assignment. Now we'll take one question number 5. All questions are important. Agastya Limited is a listed company engaged in the manufacture of automotive spare part. The company is preparing, it's a listed company, the company is preparing the financial statement for year ended 31st March 20x3. The directors of Agastya Limited are entitled to an incentive based on the operating profit margin of the company. Now this line you underline, directors will get incentive which is based on profit of the company, operating profit of the company. So what the directors will try to do? Please reply. What the directors will try to do? They will try to increase the profit. To increase the profit, they may use some creative accounting. They will follow some manipulation of accounts. You are appointed as a consultant to advise on the preparation of the financial statement, and you notice the following issue. So what is the issue? On 1st April 20x2, Agastya Limited defined benefit pension scheme was amended to increase the pension entitlement from 12% to 18.5% of final salary. So what will be the implication? You will have to compute as per Ind AS 19. I will tell you, Ind AS 19 will require, you will compute past service cost. If a plan is amended, and in this case, because the impact will be more, benefit will be paid, past service cost will have to be calculated, and you will have to record past service cost account debit to provision for defined benefit obligation. Past service cost will be transferred to P&L account. So the moment you transfer past service cost to P&L account, what will happen to profit? If you debit past service cost to P&L account, what will happen to the profit? Profit will, come on, if you debit past service cost to P&L account, what will be the impact on profit? Profit will decrease. And if the profit will decrease, the incentive to the directors will decrease. Yes, correct answer. The amendment was made due to salary cuts made on account of the pandemic. The chartered accountant has shown such increase in the pension entitlement amounting to euro 85 crore, oh my god, under the head employee benefits, forming part of the operating profit. So this is right. Increase in pension entitlement will be charged to P&L account under the head employee benefit expense. So accountant has done the correct thing, but what are the directors saying? Our directors are unhappy. This is director sad because his bonus will reduce. The directors are unhappy with this presentation. They believe that pension scheme is not integral to the operations of the company since it is paid post retirement of the employees, and thus insist that such presentation should be misleading in computing operating profit or loss. Accordingly, the directors propose a change in accounting policy so that all such gains or losses on pension scheme would be recognized under other comprehensive income. What the directors are saying? Directors are saying that instead of charging P&L account, you please show this in other comprehensive income. Does Ind AS 19 allow you to do that? The answer is no. Under Ind AS 19, past service cost, current cost, interest cost will be charged to profit and loss statement. Only change in actuarial valuation, which is called remeasurement gain or loss, will be transferred to P&L account. So directors believe that this policy choice will make the financial statement more consistent, understandable, therefore justifying the same on the ground of presentation. So directors are actually saying something which is not consistent with Ind AS, which is not as per Ind AS requirement. The pension scheme of Agastya Limited is currently in deficit. Discuss the ethical and accounting implication of the above issue. Accounting implication I have explained. This is a wrong accounting as per Ind AS 19. past service cost should be charged to profit and loss statement. The view of the director that it should be taken in OCI is not correct. That is not as per Ind AS 19. Increase in the liability due to modification or amendment to the defined benefit scheme is an expense to be charged in the profit and loss account because it is for the services rendered by the employee in the past period, and therefore that is wrong accounting. And what is the ethical issue involved here? Integrity is doubtful, objectivity is missing, professional competence and due care completely thrown out of the window. Okay, then professional behavior is missing. So these are the professional ethical issue, fundamental professional ethical issue involved. Plus, if you look at code of ethics, then code of ethics is also violated. So which principle of code of ethics is also violated here? Let us make a list of those clauses which will be violated. So if you are a chartered accountant in practice, part 2 of schedule 2, part 1 of schedule 2 for chartered accountant in practice, because you have been appointed as a consultant, so you must be a chartered accountant in practice. Then clause number 5, 7, 8 are violated. What is clause number 5? Clause number 5 is fails to disclose a material fact known to him. Clause number 6 is failed to report a material misstatement known to him appearing in the financial statement. And clause number 8 is fails to obtain sufficient information which is necessary for expression of an opinion. And clause number 7 is does not exercise due diligence or is grossly negligent in the conduct of the professional duties. So clause number 5, 6, 7, 8, if you are a chartered accountant in practice, then these clauses are violated, and the chartered accountant, if he signs such a report, then he will be guilty of professional misconduct. He will be guilty of professional misconduct. Is it right? Is the answer right? A chartered accountant will be guilty of professional misconduct here because he is failing to disclose a material fact. He is not reporting a material misstatement in the financial statement. He is not exercising due diligence and proper care. Hence, these are the issues you have to identify in the answer, and you have to present the answer in your own way. Any query on this? So you can just highlight or underline these clauses of part 1 of second schedule which are getting violated if the chartered accountant does not report as required by Ind AS 19, but he succumbs to the pressure of the board of directors. Board of directors wants to increase the profit because their incentive is connected to their profitability. Is it right? Next point. So today what you do, the answer is very lengthy. If you write in the notebook, it will cover 5 or 6 pages. Short summary. Prepare short summary of the answer on your own and keep it with you, so that one day before the exam, when you have very limited time, you can only read your own short summary, whatever I have explained, and you can move over it. All these questions are important. Next, point number D is financial interest, compensation and incentive linked to financial reporting and decision making. This is really going to be affecting what is called conflict of interest. Conflict of interest, because if the remuneration is linked to financial reporting and decision making, conflict of interest will be there. Objectivity will not be there. And of course, your integrity may not be maintained. Therefore, a chartered accountant, while taking assignments, should ensure that his reporting should not result into financial gain. There should not be a linkage between what he reports and the financial gain he gets out of it. That if that is there, then he would be he would try to manipulate or misuse confidential information for personal or financial gain. If there is a link between the performance or reporting and the gain, financial interest of accountant or their immediate or close family member can create threat to compliance with the fundamental principle. Very true. Fundamental principle are 5 things: integrity, objective, professional competence and due care, confidentiality and professional behavior. If you or your family member have got some financial interest, then you may be inclined to compromise with this fundamental principle, and that is called threat to fundamental principle. Example of such self-interest threat would be manipulating price sensitive information. So you would try to manipulate profit figure, because you or your family members might have invested in the shares of that company. So you think that if I report more profit, share price will be more, therefore we will get more profit. Then having financial interest in the employing organization, you have got some other financial interest, then it is bound to affect your decision. For example, your brother may be supplying material to this employing organization. You are working in the organization, your brother is also supplying some goods to that organization. It might affect your independent decision making. And third is being eligible for profit related bonus. Very important, already seen earlier. If your bonus is linked to profit, then you might be influenced to manipulate the account, and holding deferred bonus share rights or options affected by accountant decision, or you might get bonus share or some rights in future. If that is the case, and if that is subject to some condition, you might be interested in manipulating the accounts, participating in compensation arrangement. So you are getting compensation which are linked to specific performance targets. These are the threats to fundamental principle, threats to objectivity, threats to maintaining your integrity. So then what will you do? You have to take adequate safeguards to prevent conflict of interest. Adhering to ethical guideline and seeking guidance is important. So whenever you find there is a conflict of interest, approach the senior, go to the person who can guide you as to how to avoid conflict of interest. If possible, you should disassociate yourself from such kind of assignment only. Otherwise, you are violating the fundamental principle of objectivity and integrity. I have told you in the first lecture, objectivity and integrity are two very basic principles of being a good financial professional or any professional. If you don't have integrity, you are not supposed to call yourself a professional. Let me put it very bluntly. So now we'll take question number 6. Institute questions are also very lengthy, answers are also very lengthy. By the time you finish reading the answer, you may go into sleep mode also. So in case if you have sleep issues, at the night you can open this chapter, read the answer, maybe you will get an early sleep. Yes or no? Many students are saying yes. Oh my God. Yes. Good idea. I understand. Directors of Spins Limited are eligible for an incentive. Again you see, directors are eligible for incentive, which is computed as a percentage of cash generated from operation as per Ind AS 7. So what is the incentive equal to? Percentage of cash flow from operating activity. Percentage of cash flow from operating activity. So what will be the intention of the directors now? What will directors try to do? Directors will try to increase cash flow from operating activity. So they will try to make such presentation which will increase cash flow from operating activity. Due to onset of the pandemic, company has not performed well. Oh my God. And has in fact lost cash from operation. Oh. So original calculation is cash flow from operating activity negative. If the cash flow from operating activity is negative, incentive will be zero. Incentive will be zero. In order to meet the cash requirement, the directors are planning to dispose of underutilized equipment and investment, not subsidiaries or associates. So they are planning to sell equipment and some investment other than subsidiary or associate. The directors opine that means in the opinion of the director, that the cash generated from sale of such equipment and investment would be used for operation. What a wonderful idea. They are saying that I am going to sell equipment. The amount received from sale of equipment would be used for operations. The amount used for sale of equipment will be used in operation. So let me call it cash flow from operation. Have you done anything like that in your life? Amount realized from sale of equipment, they want to call it as cash flow from operation because they are going to utilize it for cash flow from operation. As per Ind AS 7, where it should be presented? Investment activity is the right answer. You are right. So it should be shown as investment activity. Purchase and sale of PPE, intangible asset, long-term asset are shown in investment activity. That shows the intention of the management, whether they are investing more or they are selling the long-term asset. Cash flow from operating activity shows the performance of day-to-day operations. Cash realized from sale of equipment is not a cash flow from operating activity item. Therefore, this presentation is not as per Ind AS 7. If the company is trying to show that, then it is violating the presentation requirement of Ind AS 7, and the company is doing so because they want to show a positive cash flow from operating activity. They want to show positive cash flow because their incentive depends on that. So it is a gross manipulation of accounts. It is simply a manipulation. Just you want to show positive cash flow from operating activity, you are showing something which is to be shown in investment activity under operating activity. This is violation of the fundamental principles. You are not you don't have integrity, you don't have objectivity, you don't have professional competence and due care also, because had you got professional competence, you would have never said that this item should be shown in operating activity. The directors are concerned about meeting the targets in order to ensure security of their job. Oh my God. And feels that this treatment would enhance cash flow picture of the business. The inflow on sale of equipment and investment have potential to make cash flow from operation positive. This is a creative accounting. Cash flow from sale of equipment, they want to show it as cash flow from operation to make it positive. Discuss the ethical responsibility of the chartered accountant who is an employee to ensure that the manipulation of the statement of cash flow as suggested by the directors does not occur. So first of all, what are the financial reporting issue involved? I have explained. It should be shown under which head? It should be shown under operating activity, investment activity, mistake in writing. It should be shown in investment activity, not in operating activity. So that is the financial reporting issue. And what is the ethical responsibility of the chartered accountant who is an employee? If you are the employee of this company, what will you do? You will explain to the directors that as per Ind AS 7, this cash flow is to be shown in investment activity. The objective of operating activity, investment activity, financing activity are very different. The stakeholders look at this cash flow from different perspective. Operating activity shows how the company is generating cash flow from its day-to-day operations and whether it will be able to generate cash flow in future from operations or not. These are useful for decision making for investment purpose in the company. Cash flow from investment activity has a different purpose. How the funds are utilized in investing in long-term asset. So companies should not do this. After explaining to the directors, if they don't agree, then they might report to the institute. They may take legal help. They may disassociate from the assignment, or in the extreme case, he can even resign. That is the last option. Disassociation or resignation is the last option. But in spite of that, if he succumbs to the pressure of the management, then he will be guilty of professional misconduct under Clause 1, Part 2, Schedule 2. Negligence in performing your duty. Negligence in performing your duty. So that is your Clause 1, Part 2, Schedule 2. Last paragraph will give you that if you are an employee and if you do not follow your duty diligently, professionally, then you will be guilty of professional or other misconduct under Part 1, Schedule 2, okay, Clause 1. So all this you have to write on your own. Most of the ethical issues are coming under either Clause 1, Part 2, Schedule 2 or Clause number 5, 6, 7, 8 under Part 1, Schedule 2. Okay. So this is the answer. This is the answer. I have explained to you everything printed in the book. Now your duty is to make a summary of the answer. Make a summary of the answer. That I will not do. You are a grown-up student. Make a summary as homework. If you prepare your own summary, you will be able to remember it for a longer time. Is it right? Question number 7. InfoStar Limited, listed company, engaged in the provision of IT services in India. The directors are underlined, paid a bonus based on profit achieved by the company during the year as per the bonus table given below. So whenever the directors or the employee or the chartered accountant are going to get bonus which is linked to the profit figure, then they would like to increase the profit even if they may have to manipulate the account. Is it right? So what is the profit range and what is the bonus? If the profit is below 1 crore, no bonus. 1 to 5, 2%, 5 to 10, 4%, 10 to 20, 6%, 20 to 30, 8%, more than 30, 10%. The draft statement of profit and loss for the year ended 31/3/2002 currently shows a profit of rupees 2 crore. 2 crore into, now you are into this slab, 2%, 4 lakh only. Directors are not happy with 4 lakh rupees bonus. They want more. They want more. Human beings by birth are greedy creature. Okay. They want more. We want more. The employees of InfoStar Limited have historically been paid individual performance bonus. Employees, not director. Employees have been paid historically individual performance based discretionary incentive for last 15 years. Okay, so this is their constructive obligation. For last 15 years, even though it may not be a legal obligation, but they are paying individual performance based discretionary incentive for last 15 years. So this year also they should pay, but if they pay, then it will affect their profitability. It will affect their profitability. So can the management say, because it is discretionary this year I will not pay you? Based on the past trend and performance, the bonus amount for year 2001-2 would be rupees 3 crore. So now they will have to pay 3 crore rupees bonus and incentive to the employees. Now the profit itself is 2 crore. If they pay bonus to employee 3 crore, the profit will become negative and the directors will not get anything. In view of the possibility of directors not receiving bonus on account of poor performance. So now what will happen? Your profit is 2 crore. If you pay bonus to employees, which based on past trend is 3 crore, you are left with only 1 crore negative, means loss. If there is a loss, directors will not get any bonus. What they are planning now? Understand, InfoStar Limited CFO, who is a chartered accountant. CFO is a chartered accountant. He is an employee of the company and he is holding CFO's role, has suggested that discretionary incentive usually payable to employees could be avoided in the current year. Says don't pay because it is discretionary, and if I don't pay, my profit will be 2 crore, which will result in companies reporting profit. As a part of its annual report, InfoStar Limited reports employee satisfaction scores, staff attrition rate, gender equality, and employee absenteeism rates as non-financial performance measure. So in their annual report, they are writing all this: gender equality, staff attrition, satisfaction score, non-financial absenteeism, non-financial performance. CFO has told the directors that no stakeholder reads the non-financial information anyway. Okay, so they are misjudging the stakeholder. They are saying that shareholders are not interested in reading the non-financial information, and thus his aforesaid suggestion of not paying discretionary incentive would not impact the company greatly. He says that if I don't pay this discretionary bonus of 3 crore, it won't affect organization in any which way, because shareholders don't read non-financial information. Discuss the ethical and accounting implication of the above issue, referring to relevant Ind AS wherever appropriate from the perspective of CA. Sushil Bhupati. Oh, name is also given. The institute should not give name. There may be some genuine CS Sushil Bhupati and he will feel offended. Right. Financial reporting issue. In this problem, bonus is discretionary. Like it happens in case of Diwali bonus. It is discretionary, but it is past practice since last 15 years. So it becomes past practice, becomes constructive obligation. Constructive obligation under Ind AS 19. And if you do not pay this bonus, it will affect your employer-employee relationship. It will affect employer-employee relationship, because the employee was hoping that he will get bonus this year also, and suddenly you tell him that no, this is discretionary and I will not pay you bonus. To the employee you will not pay bonus, but to the directors you will pay bonus. So you are basically snatching the bonus from employees and paying to the directors. It is injustice to the employee. It will reduce the morale of the employee. And if you say that no, it does not make any difference to the stakeholder if we report dissatisfaction of the employee, you are sadly mistaken. Investors or stakeholders are very smart these days. They not only read the financial information, they also read non-financial information. They try to have a holistic view about the company, not just its profitability. Some of your key employees can even leave the organization, and if key employees leave the organization, then your future performance can be affected. It will bring bad name for the organization. It will cause disrepute for the organization if you do this, because employees will also see that we are not getting bonus, but the management or the directors are enjoying the bonus. So their morale will go down. So that is my financial reporting and ethical issues involved. Knowing that also, if the chartered accountant does not make provision for discretionary bonus, it will also be a violative of Ind AS principle, which says that constructive obligation should be provided for, and therefore his integrity is not there, objectivity is not there, professional competence and due care is not there. This is not a good professional behavior. Is it right? And this is also not as per code of ethics also. So all these points you have to bring in your answer. Right? Any query on this question? Please ask if you have any query, or if you want to say something about this question. Institute has written a long answer. Ethical issues involved. Long-term success of the company depends on the fair treatment of the employee, etc., etc. Okay. And then there is a moral issue involved also. Employees are not getting bonus, directors are getting bonus. And then you are also not understanding that stakeholders read the financial as well as non-financial information. So this will be a case of not exercising due diligence, and therefore the CA would be acting against the interest of the public. And there is a reference given in your book, section 100.1A1 Code of Ethics issued by the institute. So this is the answer of question number 7. Again, I repeat, even if you get bored, I don't mind. Make a quick summary, a short summary, so that one day before the exam, you can quickly go through your summary prepared by you. Next point is, when you are a chartered accountant in service, you will get lot of inducements, gifts, hospitality, is it right? So that you will be asked to return the favor. Whenever you receive gifts, hospitality, inducement, which is beyond the professional contract, something is wrong. If somebody is offering you gift which is beyond the normal call of his duty, something is wrong. And if you accept such gift, then you are under an obligation to return the favor, and that will compromise your integrity and objectivity. So what should be the principle here? Say no to all such inducement, gifts and hospitality. They may give you free air ticket. Okay, they may give you some expensive jewelry as gift, or they may give some car as gift, or they may pay the fees of your son for foreign education. All this happens, I have seen. And then you are tempted to return the favor by manipulating the accounts, by showing better picture than what it is. So this is called inducement. Okay, it is bribing basically. Do you know bribe? Bribe. All gifts, inducements, favors to anybody is nothing but a form of bribing to influence his behavior without proper intent. This can range from small acts of hospitality, like you can give him treatment in a 5-star hotel. You will arrange a party, okay, in a 5-star hotel. You will give expensive gifts, and finally what is the answer? Where it will lead to? Non-compliance with laws. So as a chartered accountant, what should be the practice? Do not accept gift which is beyond the normal call of the duty of a chartered accountant. Example of inducement will include gifts, expensive gift, okay, jewelry, 5-star hotel stay, holiday resort booked by the client for you, foreign travel funded by the client, okay, then hospitality, entertainment, political or charitable donation. Like for example, if you are running some NGO, they may give a heavy donation to that NGO so that you can be influenced. Then appeals to friendship and loyalty, employment or commercial opportunities. They can even offer employment to your spouse or siblings or relative, or they can give you lot of preferential treatment. Okay, what are these? I will call them bribe. You may call whatever you want. I will call them bribe. Even if you are a chartered accountant and if you accept it, which is beyond your professional contract, you are accepting a bribe. Okay, somewhere it will affect you in your decision making, in taking independent decisions. So inducement can come in various form and can be used to gain favor or special treatment. Very simple. There is a give and take. You get incentive, gift, you will have to return it by not qualifying the audit report, by giving wrong accounting treatment. Chartered accountant must be cautious, be very cautious when faced with inducements to ensure they maintain their integrity and comply with ethical standard. So you can make a simple policy in your office, no gifts accepted, only blessings. Okay. In our office, we have a policy, no gifts from vendors. Even if it is Diwali gift, it has happened that we have returned it. No gifts from vendor in our office, because somewhere they are going to influence our decision making in taking the right decision. So how they express their gratitude? You just say, Happy Diwali, sir. I will be very happy if you say this much. You don't have to bring gifts. Okay. That is enough. I personally do not give any gift to anybody. Sir, why? You are such a well-known person. The reason is simple. If I am giving gifts to somebody, I may in future try to influence that person. Okay, and that sets a wrong example for the other people also. As a faculty, as a teacher, we have a lot of responsibility, because family members, relative and students, they look upon us. Some of them, nowadays it is not, but earlier they used to think teachers as role model, and therefore if teacher is doing something wrong, they will think, though this is the right way. Wrong behavior of the faculty or teacher in the public place sets a wrong example for the generations to come, and they might start thinking that if teacher can do it, we can also do it, and nothing wrong with that. Even in marriage also, don't accept the gifts. The person who has asked this query, I am sure you are about to get married. Okay, don't take gift, don't receive gifts. Try that philosophy and the life will be very simple. Okay, if you want to complicate, then do it, because if you receive something, then you have to give also something in return. Try something, people will feel bad about it, but over a period of time they will understand your nature, and then they will not give gifts to you or expect something, some favor from you. So chartered accountant must be alert to threats arising from inducement offered by or to their immediate or close family members in relation to their professional relationship. So if there are professional relationships, it is better not to accept any gift. You are getting your fees for your professional work. That is enough. Why do you want more gift? Okay. Sometimes they may not give you the gift. They will give gift to your wife or family member, and those family member will then pressurize you, like you see in movies. Okay. You get pressure from other family members to behave in a certain manner. So there is a side effect. If an accountant suspects that inducement is intended to influence improperly their behavior or that of a counterparty, they should advise family members against accepting the inducement. You should be firm about this. Say no to the gifts from any professional relationship. Your fees is enough. Okay, your fees is enough. I had gone to Japan some years back. Now I will tell you how much these Japanese people are having objectivity and integrity a cab driver, okay, our fare for the cab was, say for example, only for example purpose, let us say 455 yen, example. I paid him 500 yen note. Normally in India what the driver will do, the driver will ask for the tip. So I said you can keep 10 yen as tip. He said no sir, we in Japan we don't accept tip. I have given you services of 455 yen. I will take 455 only and he will return the change to you. If the change is suppose not available 45, he will return me 50. He will not keep extra. He can return extra if he doesn't have the change. I really liked it. Okay. And I am sure you will also like it. So even if he has to return a change of $2, 2 yen, 5 yen, they keep lot of change with them so that the customer should be returned whatever is due to the customer. They will not keep any extra money. But in many countries, the drivers, those who work in restaurant, those who work in places, they expect that you should give them tip, which is actually wrong. The nature and closeness of relationship between accountant, family member and counterparty play a role in determining whether there is an intent to improperly influence the behavior. Nothing comes free. One student has given one example that in Hyderabad there is an IMAX theatre. Even the owner purchases the ticket. That is right, because if suppose there are other shareholder in that company, so owner cannot watch free. If you are watching free, you are denying other shareholders their share of income. So that is the best policy. Even Narayan Murthy in the office, if he used to take some printout from the office printing machine, he used to keep some amount for that. He said, no, this is not my company. I am not 100% owner. There are other shareholders. So if I am taking some Xerox from the office printer, it is my duty to pay to the company. And because you will set an example, other people will also behave. So in the IMAX theatre in Hyderabad, because the owner is also paying for the ticket, no government officer is asking for free ticket, because the government officer, how they will ask you free ticket when I being the owner, I am also paying for the ticket. That is a great example of integrity, and everybody should follow that. I hope our politicians are also listening to this. If a counterparty offers job to accountant spouse, very common, either job or some other favor, outside the normal hiring process, even that means she is not competent or there are better candidates, during contract negotiation it may raise suspicion of improper intent. So accountant must uphold ethical standard, avoid conflict of interest and act with integrity. I would love this paragraph. Okay. Integrity is very important. When you are in profession, people will try to give inducement to you, gifts to you, provide favors to you, but all this is with the simple sole objective of getting some favor in return at the appropriate time. Next point, F. Responding to non-compliance with laws and regulation in case of employment with listed entities. Now there is another problem. Companies do not follow certain law, and then the chartered accountant may be pressurized that you do not report, or sometimes the chartered accountant himself may not comply with the laws, regulations, etc. Now what should you do? You are living in a country and that country has got certain laws. You may or may not like it. Most of us don't like most of the laws. Most of us don't like most of the laws. I don't like income tax. I work hard for the whole year. Every day, almost 350 days in a year, I come to the class shouting at the top of my voice, okay, 6 to 8 hours per day, I earn the income, and 30% of that is taken away by the government. That means for almost 1/3 of the year, I am working free for the government and without getting anything. I don't like GST. 18%. I buy this pen for 200 rupees, I pay 36 rupees extra. What is this? So there are so many laws which we don't like. And in business you have many more such laws. But then, being a citizen of a country, being a company registered under the Companies Act, you have to comply with the laws. The laws are designed by your representatives in the parliament only. It has not come from some other world. So therefore you need to observe the law. And if you do not observe the law, there will be consequences. One consequence will be fine, penalty, sometimes jail, but overall it will bring a bad name for the organization. They should assess the implication and determine how to respond to non-compliance with laws and regulation. If they find that the employer or the client is not observing the law, how they should act? First, they should alert the management. Tell the management that these laws are not being observed, or those who are in charge of governance, governing body, board of directors, to take further action in the public interest. And non-compliance involves action contrary to laws or regulation by the employing organization. Many companies do not pay TDS on time. Many companies do not deposit PF or whatever ESI, gratuity, etc. They don't pay to employees, or they don't pay to the respective authorities on time. Some of them, they don't deposit GST also. Nowadays, if the other person does not deposit GST, it will get reflected in the GST portal. So what is this? This is gross negligence of the law. So you need to report to the management, governance body and individuals who can take action against non-compliance. Some of the example of laws which are not complied with, regulations which are violated: fraud, corruption, bribery, money laundering, terrorist financing, proceeds of crime, security market trading, manipulating the stock market, banking and other financial products and services, data protection, tax and pension liability payment, environmental protection. Even you have to take care of the environment. There are environmental laws. Then there are public health and safety laws and regulation. Your action should not cause damage to environment or should result into public health and safety issue. But company is doing that. So what are you supposed to do? As a responsible chartered accountant, then you have to take necessary steps. As I told you, you have to report to the senior managers, report to the board of directors, and report to the respective government authorities also if you find that they are not taking proper action. So accountant shall consider them in determining how to respond to non-compliance. Non-compliance to law is not a good thing. It will affect the reputation of the organization. Sometimes the organization can be even wound up. So next point is responsibility of senior chartered accountants in service. Senior chartered accountants, those who have been working in the organization for a long time, they have got lot of experience, expertise of dealing with different matters. Okay, they have great influence over the organization resources also. They have a higher expectation to take appropriate action. So go to the senior chartered accountant in the firm or in the organization. Tell them that there is a violation of the law and it is expected that they will take necessary action in the interest of the public. If they find that there is non-compliance, the expectation is due to their roles, position and influence within the organization. So first thing, when you join as a junior accountant and if you find that some laws are not being followed, first you go to some senior chartered accountant and tell him it is expected that the senior chartered accountant will listen to you. He is in a position to influence the organization and try to ensure that there is compliance with the law. Okay. So what the CA should do, the senior CA should do, the senior CA who identifies or suspects non-compliance should discuss the matter with their immediate superior authority or higher authority. So CA will go to senior CA. Senior CA will go to higher authority or their superior. Okay, try to explain them. Try to ensure that it is properly communicated to those who are in charge of governance. Compliance with laws and regulation regarding non-reporting should be followed. Steps should be taken to rectify and mitigate the consequences of non-compliance. This situation you will also come across in future when you join the organization. You will find that there are violation of laws and then what action you have to take. This is what the institute is guiding you. You will think that no, this is not my problem, this is company's problem, but ultimately if the company comes under difficulty, you may lose your job. Company can be wound up and you will find it difficult to secure another job of a company which has committed fraud, okay, which has not followed the law. Efforts should be made to prevent future non-compliance and deter its occurrence. So you have to ensure that in future such non-compliance do not occur. Consideration should be given to disclosing the matter to the external auditor if required for their audit duties or legal obligation. You can even report to the statutory auditor, because statutory auditor also have to report about non-compliance of the laws. Next is determining whether further action is needed. You have reported to seniors. Senior chartered have reported to superiors, those who are in charge of governance, etc. Now let us see how the superiors and those who are in charge of governance or the board of directors will respond. The senior CA will evaluate the response of their seniors. Let us see what they have done. Have they taken necessary action or have they also ignored it? Loss of confidence in senior or those who are in charge of governance will occur if accountants suspect their involvement in non-compliance or if they fail to report the matter to appropriate authority within a reasonable time. Sometimes superiors are also involved in non-compliance, so therefore they will not take action, they will not report to appropriate authority. So in that case, what are the additional action the senior CA can take? He will inform parent company's management. Suppose you are a subsidiary, you find non-compliance in subsidiary, you report to the directors of the subsidiary but they are not acting, probably they are also involved, then you can report to the management of the parent company in case of a group company and reporting the matter to appropriate authority. If suppose there is no holding subsidiary structure, you can even approach the appropriate authority, court, police or any special body created, and if suppose that also is not happening, you can resign. That will maintain your integrity and objectivity. Resignation should not be the sole action taken. That is, don't jump to resignation. First you apply all these steps, but there may be limitations on other available action, making resignation the only option in some cases. Resignation should not be the first choice, but sometime if you are left with no option, you can resign from such companies which are not following the law. Otherwise you will also get involved in that mess some or the other day. Seeking advice. Okay, seniors are also not following, management is also not listening to you. So assessment of the matter might involve complex analysis and judgment. The senior chartered accountant might consider. So what you will do, consult internally, take legal advice to understand what are your options and professional and legal implication of taking any course of action. So if you take any action against the senior people in the organization, there will be your legal and professional implication. Are you ready for that? If the answer is yes, you have to go ahead. You can even consult the institute. You can write a note to the institute also, and the institute will also help you out. Now, determining whether to disclose the matter to an appropriate authority. In some cases, disclosure to appropriate authority is prohibited if it is contradicting the law or regulation. Okay, then you don't disclose to appropriate authority if it is contradicting the law. The purpose of making a disclosure is to enable appropriate authority to investigate the matter. So you can inform the SEBI, for example, in case of security fraud. You are called whistleblower, and that is required so that necessary action can be taken in the public interest. Now next point is responsibility of chartered accountants other than senior chartered accountants. What is the role of senior chartered accountants? We have discussed in the above paragraph. What about other chartered accountants? When a chartered accountant becomes aware of non-compliance or suspected non-compliance, they should first try to understand the nature and circumstances of the matter. You will join the organization next year in some other company. After 6 months you will join and you will find that there are non-compliance. First you try to understand what is the nature and circumstances, and if you suspect non-compliance, what you do? This is for you, the young chartered accountants. Immediately go to the superior and ask them for appropriate action. If superior is also involved, go to the next higher level of authority. In exceptional cases, what you can do, the accountant may decide to report the matter to an appropriate authority. For example, you can report to SEBI. If it is a security related fraud, you can report to SEBI, you can report to RBI or similar bodies. And when making a disclosure, when you are informing others about a suspected non-compliance, you should act in good faith and be cautious in your statement. This is what our chartered accountants will do when they find that there are non-compliance. Should we go to institute or other bodies first? The student has a good question. The answer is first you should go to that body which is responsible, and thereafter you can go to the institute. Okay. One student is also asking, can we mark a copy to ICI? Now it will depend on what kind of non-compliance is that, and maybe if you find some chartered accountants are involved, then you can mark to the institute also. So these are delicate matters and you have to handle it carefully. Okay. Question number 8. See the size of the answer. I don't know who drafts such long lengthy answers and how do they have so much patience in drafting. Question number 8. Agastya Limited is a listed company engaged in manufacturing of automotive spare parts. The company is preparing financial statement for year ended 31st March 2003. The directors of Agastya Limited are entitled to, same problem we have done, they are asking same question again and again, based on operating profit margin, underline. So if you are going to get incentive which is linked to operating profit margin of the company, what will you do? You will try to manipulate the accounts and try to raise the operating profit margin. You have been appointed as a consultant. Means this is a question relating to chartered accountant in practice to advise on the preparation of the financial statement, and you notice the following issue. The draft financial statement included an amount of rupees 75 lakh. Only this issue they are changing again and again. The first paragraph we have covered in some earlier question also. Loan of 75 lakh given to director. So where should it appear in the financial statement? From your knowledge of Schedule 3 or financial instrument standard, loan given to director 75 lakh, where would you present it? On the asset side, as a separate item under current asset or non-current asset. Financial asset, either current asset or non-current asset. The loan has no specific repayment term. So that is called loan repayable on demand. If the loan is repayable on demand, then the correct answer is current asset, financial asset, loan to director. But what these directors want? Directors have included such loan under cash and cash equivalent. Oh my God! Loan given to director is put under cash and cash equivalent. Why? They want to hide this information. They don't want that loan to director should appear in the balance sheet, so they have merged it with the cash and cash equivalent. When you put it under cash and cash equivalent, it will not attract the attention of the users of the financial statement. So you are trying to basically hide this information, that is loan given to director. They have reasoned that since such loan which is advanced to one of the director is repayable on demand, it is readily convertible into cash. The answer is, you have Ind AS 7. Where they have defined cash and cash equivalent. The cash and cash equivalent definition does not include such items like loan given to director. Plus the cash and cash equivalent shows your cash management policy. The item which are included in cash and cash equivalent, basically they represent cash management policy. Giving loan to director which is repayable on demand cannot be your cash management policy. It cannot be an integral part of cash management. So this is a wrong classification of an item with the objective of hiding the fact that the loan is given to director. The argument of the director that the loan is repayable on demand, hence it is cash equivalent, is not correct. because that is not a part of the entity's day-to-day cash management policy. Further, the directors opine that presentation should not be a problem even under Ind AS framework, as financial statements are essentially prepared in accordance with accounting policy, which is a choice of the company. You can have an accounting policy choice, but you can't choose wrong accounting policy. Wrong accounting policy cannot be a choice under Ind AS. Between the choices given under Ind AS, you will have to make a choice out of it. You can't choose any policy if it is a wrong policy. And in this case, Agastya Limited has made a policy to show such loan as cash equivalent. Choice of a wrong accounting policy is not permitted by Ind AS. It has to be within the options of choosing an accounting policy as per Ind AS. Required, discuss the ethical and accounting implication of the above issues referring to Ind AS wherever applicable. So basically Ind AS 7 is not observed. This item should not have been shown under, not to be shown under cash and cash equivalent. This is my financial reporting. It should be shown in current asset. Current asset, financial asset. It should be shown in current asset as financial asset. And the purpose of this misclassification is probably they want to hide this information. Okay, so there is a lack of objectivity, there is a lack of integrity, there is a lack of professional competence and due care, there is a lack of professional behavior. And if the consultant fails to report this, then code of ethics, okay, schedule 2 part 1 applicable to chartered accountant in practice will apply, and clause number 6, 7 will become applicable. So clause number 6 is that chartered accountant is guilty of professional misconduct if he fails to report a material misstatement known to him to appear in a financial statement with which he is concerned in professional capacity. So there is a misstatement, he knows about it and still he has not reported it. And clause number 7 says chartered accountant is guilty of professional misconduct when he does not exercise due diligence or grossly negligent in the conduct of his professional duties. So you will give reference of financial reporting standard Ind AS 7. You will explain fundamental principles of objectivity, integrity, professional competence, due care, professional behavior is violated. And on the part of the chartered accountant, if he fails to report this wrong classification or wrong presentation, then he will be guilty under clause 6 and 7 of part 1 of schedule 2. So this is the answer our institute has given. Long lengthy answer, is it right? By showing loan as cash and cash equivalent, you are not following fundamental qualitative characteristic of the conceptual framework for financial reporting also. So relevance is not there, faithful representation is not there. It will affect understandability and verifiability of the financial statement, plus difficult to compare also with other organization and with the same organization with previous year also. There is a conflict of interest, okay, between director and auditor. The director wants that this should not be properly reported, otherwise shareholder can ask question as to why the loan was given to director. Hence the motivation is that they want to hide this information. Chartered accountant who is consultant must report it, and if he does not, he will be held guilty under clause 6(7) of part 1 of second schedule. And then in the exam, if you have time, you have to quote what is clause 6 and what is clause 7. This clause 5, 6, 7, 8 of the first part and clause 1 of the second part. These 2-3 clauses are important in this chapter, which you will have to understand and remember. Now next, point number G is pressure to breach the fundamental principle. Very important. Pressure to breach the fundamental principle. You are a chartered accountant and you will come under lot of pressure, because accounting can impact the profitability. Okay, at least the reported profit gets impacted. And how does it matter? It affects the bonus of the management, it affects the incentive, it may affect the share price. If the company is going to get listed, it may affect their listing prospects. Okay, and sometimes the management may want to hide some information which they will not be able to do if the chartered accountant is honest. So therefore the CA will come under pressure if he is an outside consultant, or if he is employed, the pressure comes on the CA to present information in certain way which is not as per Ind AS or as per the law. If the chartered accountant does that, succumbs to the pressure, then he is violating the fundamental principle. Okay, pressure can come from various sources. Pressure can come from internal or external sources, and therefore it can pose threat to compliance with the fundamental principle. So pressure on the CA will lead to threat to compliance with the fundamental principle. An example of pressure could be conflict of interest. This is also a pressure. Your spouse or brother or sister or some relative have a contract with the organization in which you work, and if you do not follow the dictate of the superiors, management, then your relative who has got a contract with the organization, he can lose his contract. So now you are under ethical dilemma. What should I do? Should I follow Ind AS, or should I save my job and save the contract with which the company has, with which my brother has entered into with the company? So all these issues will come. So I have made a small note here. Potential steps to eliminate threat caused by the pressure. How will you eliminate the threat caused by the pressure? One is the accountant should discuss and consult with others. So whenever such situation arise, when you are under pressure to perform in a way which is against integrity, objectivity, law, then you discuss with others. At the same time, maintain confidentiality. Do not disclose confidential information. Discussion may involve addressing the pressure directly with the person exerting it. You can even directly talk to the person, like your senior who is trying to pressurize you, or you can go to a superior, okay, if they are not involved. And then if suppose superior is also involved, then you follow the policy of the organization. Organizations have policy to complain or report about superiors, and then you seek consultation from colleague, association, or even you can take legal course. If all this is also not working, you can restructure your responsibilities. That means you can disassociate yourself from that particular responsibility or the job or the assignment, or segregation duty can help eliminate threat caused by the pressure. You can divide the work so that you are not coming under the pressure from the top management. You say that, sorry sir, I cannot be a part of this project or this decision making. This is where my conflict of interest is there. And of course the ultimate thing is, this is in the notes only. I have just made a diagrammatic presentation. It is same thing. You can find paragraph 6. Paragraph 6. Have you located paragraph 6? Very good. Now we'll come to question number 9. Oh my God, what a lengthy answer. It is more than one full scape page also. Again make summary. Question number 9. As on 31st March 2004, Mitra Limited had a plan to dispose of its 75% subsidiary Dosti Limited. Mitra has a subsidiary Dosti where it is holding 75% stake. The plan had been approved by the board and was reported in the media as well. Underline approved by the board, underline reported in the media. So the information is made public as well as stock exchange. It is expected that the non-controlling shareholder in Dosti Limited holding 25% stake will acquire 75% equity interest as well. So they have found a potential buyer also. Who is this potential buyer? The minority stakeholder who is holding 25% share. He might be interested in acquiring remaining 75% share. Also underline the expected date of completion of the sale, which is October 20x4. Is it within 12 months? Is the sale expected to be completed within 12 months? Yes. So this is a case fit for non-current asset held for sale. So therefore its classification will be under Ind AS 105, non-current asset held for sale. The decision to dispose has been approved by the board. It is made public. You are seriously looking for a buyer. You have identified a potential buyer also. Sale is expected to be completed within 12 months. So do you remember under Ind AS 105, there are some requirements to call such transaction or event as non-current asset held for sale. Yes, Dosti Limited is expected to have substantial trading losses in the period up to sale. The subsidiary can have losses in future up to the date of sale, possible. So there is a potential trading loss in subsidiary. Mr. X, a chartered accountant who is an employee in the finance department, CA in service, chartered accountant, employee, wishes to show Dosti Limited as held for sale in the financial statement. Very good CA, very good. And to create a restructuring provision to include, and he wants to create a restructuring provision, that is also okay, but he wants to include expected cost of disposal and future trading losses. Future trading losses are not to be included in provision because there is no present obligation arising out of past event. We don't make provision for future trading losses, but this chartered accountant is planning to make that. That means there is a lack of professional competence. There is a lack of professional competence. He has not updated himself with Ind AS 105. So this is chartered accountant. He wants to make provision for cost of disposal and future trading loss. However, the Chief Operating Officer COO does not wish Dosti Limited to be categorized as held for sale. COO says don't show it as held for sale, okay, and don't provide for expected loss. The CEO is concerned as to how this may affect the sales and would surely result in bonus target not being met. CEO is thinking about his own bonus only, because if you put it as non-current asset held for sale, then you will have to make certain provision for restructuring, which means profit will go down, and because the profit will go down, CEO will get lower bonus. He says don't call it as non-current asset held for sale. He is putting pressure on the chartered accountant. Don't call it as, don't disclose it as non-current asset held for sale. He has argued that as the management, it is the duty to secure high sales price to maximize the return for shareholders of Mitra. The reason is that if you announce that it is held for sale, the potential buyer will understand your desperation that you want to sell, and therefore your negotiation power goes down, okay, because they know that you want to sell it, you are in the need of funds for whatever reason you want to sell, so you will not get proper price if you disclose it as held for sale. That is the logic. He has also hinted Mr. X job. Oh, that is a threat. You will lose your job. Okay, Mr. X, you will lose your job if you dare to disclose it as held for sale. Mr. Jobs X could be at stake if such a provision were to be made in the financial statement. So this is a threat. This is a pressure. You are putting a pressure on the junior employee that your job is at a stake if you present it as non-current asset held for sale and make provisions as required by Ind AS 105. The expected cost from the sale are as follows. Future trading losses, don't make provision for this. Ind AS 105, Ind AS 37, they do not allow you to make provision for future losses because there is no present obligation arising out of past event, but you will make provision for various legal costs to sell. You will make provision for redundancy cost for Dosti Limited's employee, that also you will make. Ind AS 37, provision for restructuring will include direct cost arising out of restructuring. Impairment losses on property, plant and equipment, this you don't need to provide. This you don't need to provide. This will be automatically adjusted in the fair value of that subsidiary, because if the subsidiary's property, plant, equipment are reduced in value, the fair value of the investment in subsidiary itself will be reduced. So you will make provision for two items: various legal cost of sale, redundancy cost of employees. Required, discuss the accounting treatment which Mitra Limited should adopt to address the issue above for the financial statement, and discuss the ethical issues which may arise in the above scenario, including any action which Mitra Limited and Mr. X should take. So first answer is accounting treatment. It is a case fit for Ind AS 105. Non-current asset held for sale, and non-current asset held for sale can include a subsidiary also, and all the required condition has been satisfied. What are the required conditions? The required condition is that asset must be held for sale in the present condition. Sale must be highly probable. Appropriate level of management has committed to a plan to sell the asset. Active program to locate the buyer and complete the plan must have been initiated. Asset must be actively marketed for a sale that is reasonable. In addition, sale should be expected to qualify for recognition as a completed sale within 1 year from the date of classification, except as permitted. And the last point says the probability of required approval as per the jurisdiction should be considered as a part of the assessment whether the sale is highly probable. All these conditions are required under Ind AS 105 for calling a non-current asset held for sale, which are getting satisfied. Therefore, they will be now valuing it at fair value less cost to sell or carrying amount, whichever is lower. This fair value will take care of the impairment loss of the PPE. In addition to that, you will have to make provision for restructuring. You have to make provision for restructuring. Provision for restructuring will include two costs which are directly attributable to the restructuring and should not be related to ongoing cost of the business. So here we are going to take one, that legal cost, and second, that provision for redundancy cost of employees. Total provision required 5.5 crore. So this is my accounting issue. Now we'll come to ethical issues. The accountant of the company is partially right in stating that we must make a provision, but he has made two mistakes. He wants to consider the future trading loss also in the provision, which is wrong. That is one mistake, because there is no past obligating event, and therefore he should also not consider the provision for impairment loss. So there is a lack of professional competency and due care. He needs to update his knowledge. Okay, he should attend professional development courses. Along with you, he should attend our FR classes so that he will understand what is to be included in the provision for restructuring. Now we'll come to ethical issues. Ethical issues are there because there is a direct threat to your job. The top management is pressurizing a junior chartered accountant to manipulate the account and not show it as held for sale, because they think that it will affect their bargaining power and they will get a lower sale price. Secondly, if the provision is made, profit will reduce and their bonus will be affected. If the chartered accountant is succumbing to such pressure, then there is a lack of objectivity, there is lack of integrity. We have already seen lack of professional competence and due care, and there is a lack of professional behavior also. So in such cases, what the CA can do, he can approach the CEO, COO and explain to him about Ind AS 105 and Ind AS 107 and try to communicate with him to make necessary adjustments so that financial statements are fair and objective. If suppose he is not able to convince the CEO, and if he goes ahead and follows CEO instruction, he is guilty of misconduct under clause 1 part 2 schedule 3, that is lack of due diligence, negligence in performing your duty, and therefore he will be held guilty under clause 1. So this is the ethical part of this question. A very good mixture of your Ind AS and your auditing standard. That is what this chapter is about. And there is one last question, number 10. Question number 10. Shastra Limited desires to upgrade its production process. Since the directors believe that technology-led production is the only way the company can remain competitive, on 1st April 20x5, company entered into a property lease arrangement in order to obtain tax benefit. However, the draft financial statement do not show lease asset or a lease liability as of that date. A similar problem we have done earlier also. Okay, you have taken asset on lease, but you don't want to show lease asset and lease liability in the balance sheet. So you are not following the principles of Ind AS 116. A new finance controller CA Sunil Raghavan joined Shastra Limited before the financial year ending 31st March 2006 and was engaged in the review of financial statement to prepare for the upcoming audit and to begin making a loan application to finance a new technology. So they are looking for funding. CA Raghavan believes that the lease arrangement should be recognized in the balance sheet. So he thinks it should be recognized. However, the MD, Miss Anusha Srivastav, MBA Finance, he is a CA, he is saying correct thing, but MBA Finance people, they have another view, strongly disagrees. She wishes to charge the lease rental to statement of profit or loss. MBA Finance, not good with accounting. They are saying charge all lease rental to P&L account. Her opinion is based on the understanding that lease arrangement is merely a monthly rental payment without any corresponding asset or obligation. Since there is no invoice for transfer of asset to Shastra Limited, again violation of principle of substance over form. We have read Ind AS 116. Even though you are not the owner of the asset, but you will have to record ROU asset account debit to lease liability. This MBA Finance Managing Director says, no, don't bother about all this. You simply charge to P&L account. We are not the owner of the asset. I have not received any invoice. Her disagreement also stems from the fact that showing a lease obligation would impact the gearing ratio of the company. This is the reason. If you bring lease liability, it will affect your gearing ratio, capital gearing ratio. Your liability will increase or your debt equity ratio will shoot up, gearing ratio will shoot up, which could have an adverse impact on upcoming loan application. That is the real reason. Because when you go to take a loan, the bank will look at your gearing ratio. If it is already on a higher side, then bank will not give you the loan, or bank will charge high rate of interest. Bank will have its apprehensions about your repayment ability. So they want to remove this lease liability from the balance sheet. So this is creative accounting, manipulating of account. Miss Anusha has made it clear to CA Sunil Raghavan that at stake is not only loan application, but also his future prospects at Shastra Limited. So this is a threat to the job. Lady Anusha Srivastav is threatening CA Sunil Raghavan. Breaking news. Sorry, I was little excited. But that is a threat to the job. What will Sunil Raghavan do? He is under ethical dilemma. If I report properly, then my company will not get the loan, I will lose the job. If I do not report correctly, then it is compromising with my integrity, it is compromising with my objectivity, and I am not observing the principles of Ind AS and the law. Discuss the potential ethical conflict. So potential ethical conflict is whether to obtain bank loan and save the job, or whether to report correct accounting which may arise in the above scenario, and the ethical principle which would guide how the finance controller should respond to the situation. So first you will answer from financial reporting angle that Ind AS 116 has to be followed. Record ROU asset, record lease liability. You will inform that substance over form is the basic principle of financial reporting. Even though legally this company is not the owner of the asset, but because they have the right to direct the use of the asset as per Ind AS 116, and assuming other conditions of Ind AS 116 are satisfied, they should bring ROU asset and lease liability. Now, if you do not follow Ind AS, then the fundamental principles violated would be integrity, objectivity, professional competence and due care, professional behavior, and then code of ethics also will be violated. So which clause 1 of part 2 of second schedule will be violated? Gross negligence in performance of your duty. Gross negligence in performance of your duty. Because you are the employee of the company, it is expected that you must perform your duty, okay, with full care, which you have not followed. So this wonderful discussion is over today. I request you again, please make summary of all these 10 answers for your own benefit. It will take some time, but you are a student. Okay, do not rely totally on the teacher. We are not going to do spoon feeding for everything. The answer is printed. I have explained. If you have doubt, you ask me now. Do you have doubt? Your answer will every time cover 3 areas: financial reporting, ethical issue, code of conduct. In general, you are getting more or less similar questions every time, so you will get used to such answers. Okay, so we'll take a break. Hello friends, now we'll take MCQs on professional and ethical duty of chartered accountant. This is a new topic added in your syllabus and can be important for exam. This is mixture of auditing and financial reporting topic. Good chapter added in your syllabus, which will give you a holistic view of a role of chartered accountant in financial reporting, which will have an impact on his professional ethics and conduct also. So here we will take our first question on professional and ethical duty of chartered accountant. You will participate. What should a chartered accountant do to comply with the principle of professional behavior? What should a chartered accountant do to comply with the principle of professional behavior? Option A, discredit the profession to raise awareness, follow relevant laws and regulation, promote personal interest over professional obligation, and engage in conduct that may compromise business relations. So the students are saying answer is B. Yes, the answer is B. You have to follow relevant laws and regulation. These 3 are not principles of professional behavior. The answer was B. Please tick mark option B. Second question, what is the primary responsibility of a chartered accountant in relation to pressure to breach the fundamental principle? Now, as a chartered accountant, you are going to come across a lot of pressure and you may be pressurized to breach the fundamental principle. What are you supposed to do? First option is succumb to the pressure if it comes from a superior. Option B, resist the pressure and report it to higher management. Option C, apply pressure on others, wow, to ensure compliance with the principles. And option D, evaluate the level of threat and take appropriate action. So the correct answer, as the students have pointed out, D is right. This is the best option. Evaluate first the level of threat and accordingly take appropriate action. Okay, this can also be the answer, but this is not the best of the answer. The best of the lot is the answer D. Answer D, tick mark. Question 3. Which principle emphasizes being straightforward and honest in professional and business relationship? Which principle emphasizes being straightforward and honest? Underline straightforward and honest. Integrity, objectivity, PCDC and confidentiality. Which one highlights straightforward and honest? The answer is A, integrity. Very good answer. Answer was A. One more chance. Question number 4. What is the stance of the chartered accountant regarding conflict of interest? Conflict of interest are acceptable if managed properly. Point B, conflict of interest should be disclosed but can still compromise judgment. Option C, conflict of interest should not compromise business or professional judgment. And option D, conflict of interest are unavoidable and should be embraced. Which is the right answer? The students are saying, sir, C is the right option. You are right. Conflict of interest should not compromise professional or business judgment. Option C. One more question, number 5. Which principle is violated if a conflict of interest compromises professional or business judgment? Which principle is violated if a conflict of interest compromises business or professional judgment? So whether it is integrity, objectivity, professional competence and due care, or confidentiality. So when there is a conflict of interest, your objectivity is violated. You will not be able to take objective decision because there is a conflict of interest. So the correct answer is B. You are right. So the tick mark option B as the right answer. Thank you very much for joining this YouTube session, this MCQ session, and please subscribe to our YouTube channel for more updates on FR. Thank you very much.